I sent out an email yesterday talking about there's a potential supply absorption scenario. Why did I say that? First of all, last week was good. We discussed about this bar. That's the email sent out before this bar show up is somewhere around here. And in the email, I talk about as long as we can break out above the high of this bar, then likely that we'll have another swing up and then to test the swing high because there was a shortening of the thrust to the downside on the leg down and then followed by a bit of the stopping action. There's a potential rally attempt and the rally is unfolding quite well all the way go up to the swing high. It stalled right at this swing high resistance level for 830. This is another for 815 is testing this resistance area. This is quite a natural place for it to have a bit of the reaction. If you look at this bar, that corresponds to the volume here. There's a slight increase of the volume, and we see that there is demand tail. What does it mean? Initially, there is attempt to push a price down, but there are people bought on the dip here. That's why there's a demand tail. Once the price hit the resistance level, there is a reaction and the price attempt to go down, but met the demand, push price up. That's why we see that there's an increasing of the volume, but the demand is still winning at the moment. And followed by next day is an inside day bar or the bullish harami. That comes with slight decrease of the volume. Today, before the market open, since we're still in a European London session, we have this spring. So a temporary commitment below this previous day low. If you look at the hourly chart, will be clearer. There's a spring right here. The temporary commitment followed by this bar is currently a reversal bar. If you are in the short-term time frame trading, that could qualify as a spring type of the setup. This is the potential reversal entry, but this is 8 o'clock at the moment. That's still unfolding. We need to see the bar can commit above that would qualify as spring type of the entry, and that could have another attempt to go all the way up to test this swing high about 48.20. That's a relatively short-term swing. Your stop could be somewhere around here. Your entry, assuming that is the end of this hourly bar, then your reward would be somewhere around there. Slightly more than 1-to-1. Let's talk about the potential supply absorption process. Initially, I thought that if we could get another little doji right on today, that will be good. Means that we'll have another small doji bar like this, still within this spread. It means that is contract throughout these 3 days. That will be great for a supply absorption process with a decreasing of the supply as well. Of course, we could anticipate another breakout and then to go up to test the channel overbought. So we have an overbought here, and then we could anticipate another overbought close to 48.50 all the way to 4900. However, since we have this intraday spring of the previous day low, that's still okay, provided that we would need to see a rally attempt all the way back to the swing high. As we discussed in the hourly time frame earlier on, we could see some more consolidation, maybe a day or two before the breakout. If it break below this low here and close below, then likely we'll have another test of the swing low. So far, this is stuck within this trading range. Either we'll break out from here if we have the supply absorption process, one bar here and then before the breakout, or if it close below the low right there, then likely you would come back down and to test the swing low level. It's not yet completed. That is the trading range for the S&P 500. So far, if you look at this S&P 500 with a strong rally followed by a relatively shallow pullback in a trading range format. Comparing to other stocks, this is still relatively strong. But bear in mind that this is the 500 plus stocks that are participating in the S&P 500, especially some of the heavyweight stocks that will help to support the index. Regarding the market breadth, we already see that it keep decreasing. That is not a good sign for a sustaining run. It means that for the long-weighted pullback or correction of the index is yet to come. I would classify this as a consolidation, not even a pullback. It's a healthy consolidation. We still yet to see a pullback or correction all the way to around 4,600 to the middle part of the up channel. This is the channel here, and this is the first level of the support. Of course, the minor level they need to break, and then this trading range, then as long as it breaks out from there, then this is the immediate target or the immediate support level 4,600, which is still bullish even if it materialized for this kind of the pullback or correction. This is still a very relatively healthy pullback. We still yet to see that to happen. We need to speculate about this few bars right here. I still suspect that we could see another attempt to break out and then to create some form of the fake out, means that it's a fake breakout. Or it might sustain for a few more days before the supply come in to push a price down. That's the S&P 500. It's still relatively healthy, and in terms of the supply level, this one shows that there is a demand tail. Demand come in on this bar, and as long as we have a decreasing of the supply, consolidate for another 1 or 2 days, then that will be great for another attempt to break out of the swing high level to go to about 4850 or even 4900 before meaningful correction. So far, this is consolidation. If you want to catch my latest videos, click on the subscribe button and the bell right now so that you get instant notification once I upload my latest video. If you want to check out my online courses, go to tradeprecise.com to find out how to profit consistently from any market without using complex indicator or understanding any financial statement, no matter you are trading or investing.